to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
Good morning, ladies and gentlemen, and welcome to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. Good morning.
Good morning.
Good morning. It is April 29th, 2022, a lovely Friday. I feel like the big news of the week this week, other than inflation and a war, was Elon Musk putting in the bid for Twitter and it finally going through. Any thoughts on that?
I think Elon Musk is going to change Twitter a little bit. I think people are, I'm listening to both sides of the story here. Some people are heralding the fact that it's going to be less restrictive, I guess, is what they perceive it. Other people are saying that, it's become a free-for-all. I think that if you look at anything that Elon does, it has a lot to do with, making things so that you can edit it, so that your tweets are not frozen in time. I think it's going to be an interesting move, but I don't think it's a bad or a good thing. I think it's going to be a different thing, right?
Yeah, and it's still got to pass regulatory scrutiny, some checks and balances.
I don't see that. I don't see that that's going to be a problem.
Yeah, I did see in a positive light that a few journalists who had been kicked off the platform were let back on, and they were publicly thanking Elon. And I mean, I guess that's opening the transparency a little bit. Other than that, you're not seeing an opportunity, a signal. So, we'll just keep an eye on the news. Other than that, this week, I believe we had some economic news, and
this
morning the market's been falling. Yeah, and the market's been falling all week. And so maybe we could start off with, where we're at with the S&P 500.
Well, the news that you were talking about was the PCE, or the personal income and outlays. And this is a popular piece of economic news for the Federal Reserve to take note of, right? They look at a lot of the other stuff, but this was made popular by Alan Greenspan. He liked this thing called the Personal Consumption Expenditures Index as a good measure, especially the core one. You see this number right here called the Core PCE Price Index. Month over month and year over year. This is where they factor out volatile things like food and fuel, and leave in just kind of durable goods and things like that. And you can see that it didn't impress or disappoint. It's high. And so discussion around the Fed. The Fed's been, hinting that it wants to control quite well. And I've actually been seeing a little bit of deflation in things. For instance, new home sales earlier this week were reported, and they're starting to see a decline in new home sales, which is, they want these bubbles to burst, but they also don't want these bubbles to keep growing the way. They kind of want things to chill out a little bit to allow a balancing between supply and demand. And so, maybe all this rhetoric, I mean, the news media and the talking heads.
I'm having trouble hearing you. Sorry, could you say that again?
I must have triggered Siri.
Technology, right?
I know.
Hey, Siri has some input.
Siri's listening to everything I say. The scoop is they want to balance things out, and maybe the dripping. They say that these things are being leaked out, but there's some truth to maybe them dripping this stuff out to kind of use the media, almost arm the media as a way of controlling the inflation. So they've been leaking out that this next move in the middle of May, and it's going to sooner than later, could be a 0.5 point rate hike instead of a 0.25 point rate hike. that's already affecting the news.
So what you're basically saying is that that core PCE number is starting to chill itself out, right? Like it's not going up, it's not going down, but it's pausing a little bit.
Yeah. Yeah, exactly. I mean, take a look at this S&P chart. So, remember a couple weeks ago, we were thinking that, hey, a bottom had been found. And this is going to be really interesting to think about. I'm going to turn on my magic marker here. This is going to be really interesting to think about. There we go. We were thinking that, Wall Street had digested that rate hike, the last, and that they were actually, after all was said and done, good with it. And so we actually saw this move where it did a little bit of a pull up, actually did higher than the previous retracement, which made us start thinking about an uptrend. And then we were getting the pullback, which is common in uptrending and downtrending symbols. In fact, we want that kind of distribution after a huge accumulation to kind of balance things and allow you a kicking board to accumulate again. And so we saw that pullback, and we actually saw a nice healthy pullback. And you can see here, I use the 3 and 5 day EMA as kind of a confirmation that a pullback is done. And we thought that the pullback not only was done, but that it had pulled back a nice healthy amount that we could springboard higher. And interestingly enough, right when that happened, right when that springboarding was about to go higher, those drips of information were coming through the talking heads about a half point rate hike instead of quarter point rate hike. Now, I'm not a fan of conspiracy theories, but the timing is just so suspicious to me of how this news was leaked right when people were getting more confidence on an uptrend. And sure enough, we got our confirmation, but a day later, that confirmation was proven false, and the market started to sell off again. And it looks like it's finding a very close to the previous level of. In fact, if I look at my chart, this goes back to what you were saying about the PCE indicator that we just got reported on this morning. I've got 2 tests of support and 2 tests of resistance of a sideways channel. This would be perfect for allowing some of these bubbles to start to deflate without actually having them pop. And this is making my premium selling traders stoked, like really happy, because what this is saying is, hey, we're going to stall the market for a while we get the forces of supply and demand, both in the expenses side of the market as well as the labor side of the market, in check. And so this means for anybody who's into sideways channeling patterns like us premium sellers, we're very excited about this. So we're going to watch to see if indeed we get a reversal down here and we just start going in a sideways channel in the broad market, which will probably lead to a sideways channel in all of our individual symbols, ETFs, and indexes.
Certainly. And so the risk of that thought process would be a break to the downside of that support, right? And so I'm curious, like, how far could that break if it does happen?
Well, isn't that a great question? So check this out. If I like to use, and I don't believe, I was talking to our guest. If you guys tuned in last week, we had a guest star on our podcast here. We had Stephen Kowitzel, and Stephen Kowitzel actually came and talked to my users last night, SIP, and he was very, very interesting about what he was talking about. And we were talking in front of my users. I was kind of questioning him about his thoughts about things like Fibonacci price retracement lines and Elliott waves. A lot of the thing that some traders believe is just magic, like, hey, there's this pattern out in nature that happens to show up in the markets and it's uncanny, but we can use these magical numbers. And both of us sort of agreed that there's really not a lot of woo-woo out there. There's not a lot. And as potential students, you want to be very careful of buying into like that there's actually magic out there or some sort of magic powers controlling the market. What it really comes down to is that these are just good tools to measure the market by, and that there's no magic way to make money in the market. There are shortcuts you can take, especially when you're analyzing things and planning things out. And that's what both Steven and my programs are all about, is what are those shortcuts and how do we minimize the amount of time? But what it really comes down to is just having that solid of knowledge. With that said, that was a little tangent. With that said, coming back, I believe that, if we look, I've seen that when you have about 120% retracement, that's when things start to get difficult for a return back into the channel. So kind of pegging at about 4,060, 4,050 would be our zone of no return. So we can probably pull back on the S&P 500 around $4,050 before are then thinking maybe the bubble is popping and not just deflating nicely. But as of right now, I mean, we're in a nice kind of sideways panel. We've already, like I shown here, tested a couple of points of resistance, tested a couple of to support, and this is jiving with what we're seeing in the economic news. So, we may come back in middle May and they may not do a half point rate hike. And then that would actually kind of satisfy me to believe that, hey, they're actually weaponizing the media to kind of to control inflation, like by dripping these little pieces of details about what they may or may not do. That affects the market in itself, and that's actually helping to control the inflation, and they haven't actually even taken any tangible steps. We'll see if I'm right or not, but the charts are aligning with the economic news, and we're kind of going into a stall pattern here, which if you're into selling options premium, you're like, yeah, you're like cheering because this is going to be a great time for the next couple of months.
Well, so let's go into some examples. But I do think that 4,000 is a number everyone should put on their watch list, because if we break that or we bounce off it, I mean, there's going to be a lot of action across the board around that. So, in lieu of this information, in lieu of what's happening in the markets, I believe you were telling me that you got stopped out of a recent trade in the tech sector, right? And so this is kind of that play on what's going on in China and how the Chinese companies were getting hit pretty hard. And so you had a play in Baba, and let me know, where we're at with things.
So this is more of, I'm really known a lot around the world as being a premium seller guru, somebody who likes sideways channels. But a lot of people forget that, when we started Trading Trainer in 2003, we did broad-based options education. In fact, I still do broad-based education for full-time traders. I have a whole separate program that full-time traders focus in on. So what we did with Baba is we did a swing trade, and we used a couple of different indicators, but we also, we used our retracement. Go ahead and take a look at a 2 year. I actually did this with one of my full-time traders. You can see Baba has been in a term downtrend, as many of the China stocks have been, whether it has to do with the fact that China keeps locking down over the coronavirus pandemic, or it has to do with, the forces that be in China not being completely capitalistic run as they are more here in the States or in Japan, for instance. Whatever the reason, a lot of the China stocks have been selling off for quite some time. And the CEO of Alibaba, ticker BABA, he used to be quite outspoken and being kind of the Chinese representative of capitalism. And it seems like And again, this is just speculation, but he hasn't been on the podium in the last couple of years, and it seems like he did kind of get a spanking from the authoritarian government in China. So because of that, a lot of the Chinese stocks have been seeing some sell-offs. And as you can see here in this long-term downtrend of Alibaba, that's the case. Now, we are always talking about sideways channels and how two levels of support, two tests of resistance define the channel. Same with trend following. So you can see here, this level of resistance is getting quite a few tests along this time. Same with the level of support. And when you have a long-term either uptrend or downtrending symbol like this, you can start to look for swing trades. And so we found a nice swing trade about 3 weeks ago. I'm going to come back to the, picture here. My swing trading entry on the evening of April 5th. And I looked for my volume. I looked all the things that would validate that, and it all came true that evening. And so on the day of April 6th, I went ahead and traded some July 7 puts. Now, if you guys remember, puts profit on the market going down. And these specific puts were optimized. When you talk about out of the money puts, and that's what these were. These were at $70 strike price. What that means is that the curve of profit versus underlying symbol is not a straight line. That means if the underlying symbol goes my way, I get more and more profit for every dollar that the underlying symbol goes my way. And if it goes against me, I actually have less risk. Now, there's a lot to picking this type of option. It's kind of even a pain in the butt to analyze. But when you pick that perfect option, and we determined it was the July 70 put, man, this thing just sings for you. And sure enough, it did. I paid $1.90 in my log for these puts. And we wound up hitting our profit target, which was a 50% ROI, which is when we kicked in our trailing stop, which is just a stop loss order that moves with the with the position so that it locks in gains as position appreciates. So we started using trailing stop in addition to the technical stop at a 50% ROI. And it turned out right here about 2 days ago, we got stopped out by our technical stop at exactly $3.80. So we made a 100% ROI gain on this nice little op trade on Alibaba. It was a swing trade. And we're looking to see if this reloads. In fact, Alibaba actually gapped up today. It's trading like you can see right here. But we're seeing if this will reload and give us yet another swing trade entry. When you have something this solid, you can't pass it up. And making every once in a while, I like to do a 2 or 3 week trade that's go ahead and double in value. I think we invested close to about $8,000 in this, and it came back at $16,000. So you can't go wrong with that.
Yeah, that's a fabulous risk to reward to return. The time frame looks like you didn't even have to wait that long, just 2 or 3 weeks to see the position come to fruition. So that's a lovely example. Are you so you're out and you're not looking to get back in, or you got these trend lines and there might be another opportunity?
There might be another opportunity. So here's one of the things that I definitely recommend for folks, especially with the broad market showing signs that it's sideways channeling, is in addition to looking at the broad market, look at the individual sectors that your watch lists are in. So organize your watch list. I always tell my folks to spend about 5 or 10 seconds on each ticker in your watch list on the weekend and just get an idea. I call it a naked chart analysis. Just get an idea of what each symbol is doing. Pattern are they presented? Are they presenting a long-term up or down trend? Are they doing a short-term up and down trend? Are they sideways channeling? Are they consolidating, or are they showing you just a random pattern that you wouldn't actually be able to recognize, and maybe you should not trade them for the next week? And I usually recommend my folks do that, on a Saturday or a Sunday morning before the rest of the fam, and check out, get an idea. But when you go through your watch list, I was actually looking over the shoulder of one of my program participants, somebody who had like one of our 1-year passes to our program. I was looking over their shoulder, and as they were doing it, their watch list was organized alphabetically. And one of my tweaks to his process was, why don't you organize it by sector? Take your watch list and figure out what each symbol sector is in, and then group them. And so when you do that, you can kind of get an idea if the 6 sectors, for instance, if your 6 candidates of your watch list are in the aerospace or in the Chinese stock, tech stock sector, and you see that they're all doing a certain pattern, maybe that pattern is different than the broad market. So for instance, these Chinese tech stocks continue in their downtrend. That's a perfect, whenever you see a long duration downtrend or uptrend, looking for swing trading opportunities might be where it's at. And that's what I'm doing here. On the broad market, though, I'm seeing a lot of sectors, especially leading into this weekend, are starting to begin that sideways pattern. So like I said, last night when we met with our premium sellers are kind of starting to sit on the edge of their seats, because there's going to be a lot of opportunities over the next month to be making money on just sideways moving symbols.
Sure. And that's why if anyone watching isn't a member, they should seriously consider becoming a member of Trading Trainer and AJ's mastermind program. I've gone ahead and added a link to the chat, or a link to the webinar, where AJ goes into some more of the strategies, gives you some insights. Feel free to hit that. Sign up for today, sign up for tomorrow, whatever works on your schedule. In addition, feel free to hit the follow, subscribe button. We are doing a weekly show. If you have anything on your plate in your arena that you're looking at potentially putting a position on, feel free to drop it in the chat. If we have time, we will take a look at it. But let's go ahead and run our little promo commercial, take a little break, and then when we'll get back, we'll get into answering some more questions.
Yep.
Thank you for.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
Once again, the link to get into that webinar is in the chat. I almost feel like it's that time of the year again. It's ready to. We're almost ready to start cruising around with the drop tops off and enjoying the summer.
I gotta ask. I don't know how many of our folks tuning in either to this live show or to the replays of this live show have Twitter accounts, but if you do, you should totally follow me at Trading Trainer on Twitter. And one of the things I just posted a few minutes before we started here was, should we do live events again? And I put a little poll out there the next 5 days. Should we do live again? It's been over 10 years since Trading Trainer did any live events. I kind of had got resting on my laurels and kind of relaxing, doing all my events by webinar, but I'm kind of feeling that itch. And we used to do 2 different types of live events. We used to do like big events where we would fill hotel conference rooms with 400 plus people for like 5 days. We also did a bunch of these small events where they were like masterminds, where we'd only bring in 20 people. So I'm just curious if folks would want to get and do like an intensive, and whether they'd want it to be a small intensive or a big. So if you can, folks, go over to Twitter and definitely follow us at trading trainer, I'm thinking about putting out some little tidbits here and there. So you'll want to be a follower of us on Twitter, but also answer my poll. Let me know what you think about doing events again, live events. Would you be somebody who would attend one? And if so, would you rather attend a huge one, or would you rather attend like an intimate one?
Awesome. Yeah, head on over to that Twitter. Hit the And if you don't have a Twitter, it's okay. Leave a comment or send an email, a DM. Any feedback is great. And I've been to a couple events myself, and they are great opportunities to learn hands-on. Moving on. So speaking of Twitter, right? So Twitter has really been in the news. It's a useful tool. But we haven't seen any opportunities on your end. I know we talked about this a few weeks ago. One of the forgotten social medias, which we said is starting to become a boring stock, is Snapchat. Now, I'm a user of Snapchat, but it's a rarity. It's like once or twice a week I'll log in and check, which makes this a great premium selling options trading stock nowadays.
Dude, Snapchat is giving us signals. So yeah, we talked about this a couple of weeks ago, and it even came up in my program for premium sellers yesterday. And the reason why it's so nice is because it is giving us clear signals, right? You can use some really slow acting indicators to do the different parts of our premium selling trade, and there's no mistakes. In other words, in fact, there's a lot of forgiveness. If you miss the signal by a couple of days, it still works out for you. And so this is like a newbie's dream for getting into a symbol. In fact, right now, it's probably by the end of today, over the weekend, it is telling us that it's time for us to start a premium selling position here. Now, if you're already in Snapchat, either as a stock or as a substitute option owner, then you can kind of pause here. If you're in it short, like maybe you decided to short some Snapchat or buy some deep in the money, far out in time put options, this confirmation would be a perfect time to sell some put premium. On the other hand, if you're brand new to Snapchat, and by the way, if you don't have familiarity with selling premium, why not put on a paper trade? See how this works out. When we get our confirmation that Snapchat's bottomed out, we easily either buy some share stock. And remember, if you're going to do some premium trading, you want to buy in lots of 100, because options are sold in contracts, which are lots of 100 option shares. So 2 contracts is actually 200 option shares. So if you want to do any sort of option trading, do everything in lots of 100. So we have an option coming up. That's funny. We have a voice coming up as to whether we want to buy Snap the stock, or if we want to buy Snapchat, the deep in the money, far out in time call option. The other thing I want to point out is we just had an earnings call on Snapchat, and so we're not going to be hassled by the uncertainty that earnings calls come for like the next 3 months with Snapchat. So this is also all pointing at perfect timing for getting into a Snapchat position. So we're thinking about, and we're going to wait until we get a nice confirmation of a bottom, but we're thinking about probably buying some Snapchat deep in the money, far out in time calls. And the reason why we would do that is because Snapchat just has a crap ton of liquidity. Get some, and I'm talking about the money like the January 2023 leap. If you look at this leap and I go deep money like the maybe the $15 call, you see here that the open interest is 328 contracts, and the bid-ask spread $16 to $16.65. This is great for a back month option that you plan on holding for a while. And so we're thinking about buying an option like that and getting ourselves established in a premium selling position.
Yeah, and I believe that that little bump the last 2 days is kind of on the heels of Facebook. They did come out with earnings that beat, and they were up a lot, so they might be on those curtails there. Wonderful. I like that. I like that setup. All
Well,
right, we've got it. Yeah,
Facebook's a very difficult symbol to trade. Some of these ones that through correlation are trading along with Facebook, but at the same time have kind of a buffering factor because they're not number one. So they kind of just be number two and number three and kind of follow along. These are the ones that we like to focus on, the ones that aren't in the headlines because they aren't number one.
sure. Yeah, and that makes the social media industry an interesting little watch list to maybe put together. And Snapchat has a great price point too, right? In that like $20 to $30 range versus
Yeah.
what, 280 plus, something like that, 230, something
Yeah.
like that in Facebook. Yeah,
That's difficult for the individual investor. And can I go on a little tangent here?
let's do it.
I gotta say that you know, I've been investing and trading from before the exchanges went public. And things have quite changed when the exchanges all of a sudden became a very much profit motivated business, right? They weren't like that before they were privately, owned, and their main goal was to be a place where wealthy people could come and play their trading game. But now that they are profit motivated, the truth of the matter is they need to suck in new investors all the time and get new people in the fold in order to grow. And people are always questioning, what about this whole thing with like high frequency traders? Well, if you look closely at how these exchanges work, they make money in a couple of different ways. One of the biggest ways they make money is in just the number of trades that people do, or that automatic trading bots do in an amount of time. They want you to trade a lot. So, as much as high frequency trading kind of screws with the market and such, it's built into the game, and it's not going to go away because these exchanges are so profitable that they actually are influencing some of the government agencies that regulate through the dollars that they put into lobbying and such. And so you've got to understand that this game is the way it is. That Wall Street and the way that these exchanges really want to keep thriving and going is to get newbies into the market. I mean, you look at that whole thing that happened a few months ago with GameStop and AMC and stuff, where they were able to do this type of trading through free commission, a Robinhood platform, and then we find out later that nothing comes for free. And of course, we know nothing comes to free for free subconsciously. We found out that Robinhood was actually getting this pay for play. In other words, Wall Street was incentivizing brokers like Robinhood to bring newbies in. Why? Because Wall Street has a whole bunch of different tactics that they use in order to transfer the wealth from, it's like fresh meat, right? It's like sometimes we hear the term that, we hear that Wall Street considers new retail traders, dumb money, and that they love it when dumb money comes onto this because they can just take it from them and grow their bank books, because we know that the markets aren't a place where wealth gets destroyed or created. It just moves from one hand to the other, usually the more inexperienced hand to the more experienced hand. So, a couple of points that I'm trying here. Number one, if you find yourself staring at the markets every day and or a lot of kind of trading where your portfolio isn't growing. It may be just staying equal, even though you're doing some trading, some frequent trading, or it's even going down a little. Realize that you're being preyed upon. And one of the better things you could do is sit down and kind of plan out what you're going to do and minimize the number of moves. I mean, in our premium selling, we talk about planning. It's the Bible, right? You plan things out. And we wind up doing for every position no more than about 2 to 3 trades per month. That's the way to really stick it to Wall Street, is to not do a lot of trading. Do minimum amount of transactions as possible that are the most effective. And so one way to think about it, and the other way to think about it is don't be dumb money. In other words, get some education, practice your paper trading. Don't come in there just following the media. And you know how I've been intimating or hinting that the media may be kind of being weaponized a little bit by the Fed to control inflation. I completely don't doubt that. But the financial news, whether it's CNBC or Bloomberg or all that, if you pay close attention, you almost feel like Wall Street is weaponizing this media, and they're kind of getting people adrenaline rush, newbies, and because CNBC, Bloomberg, they're all available on streaming networks. They're all available on cable TV. People can tune into it, and then they get kind of like their adrenaline up, and they want to go in and do some trading. In fact, I have a good friend who reached out to me recently, and she's like, I bought some of this, or what do you think about Netflix? Whatever's hot on the media. I mean, Wall Street loves that stuff because it brings in dumb money. Don't be dumb. That's my 2 cents sip, is don't be dumb money. Arm yourself with education.
Yeah, and it kind of answers one of the questions that we got in, which is, how often should I trade? And I guess you answered that in saying that if you trade too much, you'll fall into this dumb money concept. But if you can pop, 2 or 3 trades a week within this pattern or within a strategy, then you're not so dumb.
Yeah, that it was 2 things. First of all, that question came in from Manny, and anybody who's been a follower of this YouTube show knows that Manny is a 10-year-old in 4th grade who totally keeps sending us questions, and I'm all excited about this young fellow learning how to do investing the right way. But the other thing is, I ran an experiment back in 2008. I had a client that I could not get to stop watching the markets during the day. I gave him a whole bunch of end of day trading strategies. And I would say, turn off your computer. And he for some reason, it was like a major adrenaline rush. It's like when you're into a casino and you hear the bling, 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 bling of the slot machines. And, I know for a fact when I walk into like a Las Vegas or a Macau casino, I just like subconsciously, like reptilian brain, like start reaching for my wallet. Right. And so I don't know if that's what was driving this gentleman or not, but his wife actually had a smart idea, and she said to him, I want to go cross country in the RV. And so, he took her, I think it was more of not, I want to, we are going to do this, and you're going to do this with me. Because of that, and this was quite a few years ago, so being able to get wireless internet was few and far between. You had to be in a certain zone. And I remember he got himself like a Fi box, but it only worked in areas of the US. And plus his wife didn't like to drive, so he had to do the driving. In other words, he had a physical reason why he couldn't be looking at the markets. He had looking at the road in front of the RV. And so his frequency of trading went down to about a third. I think before this, he was trading over 60 times a month, like twice a day minimum, maybe 3 or a day. And it went down to like 15 to 20 trades per month. And he came back to me. He's like, I have to be uberly, like, you've been telling me to follow my plan, and I have to be so diligent with that because I'm only able to look at the market a few times during the day, and it's usually in the evening after the market is closed. So I have to be uberly vigilant. And guess what, AJ? My return on investment, I've been so adamant about following the rules of my plan. My return on investment has like jumped up. I think he went from just making about 10% on his money for that previous month when he was being a very active trader to like 30% on his portfolio the month that he had to be limited and quite, specific and rules based. So I kind of think that experiment says everything, right? Instead of being able to like do whatever you want, whenever you want, when you start to get disciplined and you're only able to do trading at certain times, it actually benefits you.
Yeah, and um I don't know. I lost my train of thought there.
I have a way of doing that.
So heading into the end of the month, AJ, anything that you're advising to the groups, anything that we should be keeping an eye on? I believe, that big interest rate decision is going to be next week, Wednesday. So the market may just be waiting till then to really make a big move.
I feel like the market is digesting as we speak a 0.5 point rate hike. And so long as the Fed sticks with that, or doesn't deviate too far from that, I think that it's going to be kind of a nothing burger. It may have like a temporary pop in or drop in prices, but it'll just go back to business as usual. So I think that, again, I could be wrong, but I really feel like these quote leaks of information or these little drops of tiny tidbits of information prognosticating what the Fed is going to do is a way of minimizing the effects when the Fed actually does something. So I'm telling my folks to let's watch our sectors, let's watch our broad market, and let's look for opportunities for selling this or getting into trades that are all about selling premium on a month-to-month basis or using weekly stocks on a week-to-week basis. And I'm really focusing on symbols that are as beautiful as Snap, that are going to require the least amount of our effort and wind up being break even. When I say break even, I mean risk-free trades within one cycle. In other words, we can get into this symbol, and then before you know it, the gains that we made on just the first cycle of collecting premium and rolling out our protective option for profit will make it so that this trade is now risk-free. None of our money is up for loss. And instead, it's just gravy every month, creating these income engines. I think that's where we want to be.
Yeah. So if anyone is new to premium selling, AJ's program, feel free to jump in the daily workshop. Once again, I threw the link into the chat. It looks like we're going to have an exciting show next week because we're going to have a lot of news to digest throughout the week.
Yeah.
May is setting up. So in the meantime, if anyone's watching has questions, feel free to drop them in the chat. Hit us in the DMs. If you have specific tickers, we'll take a look at them, see if they fit. And hit the follow, hit the subscribe, smash the follow, smash the subscribe button. And any final words, AJ?
I got nothing. What are you doing for the weekend?
I'm going to go play some hockey. So we're going to be active.
Nice. I think we're back in our Washington, D.C. home, me, wife, and the 6-month-old. The 6-month-old is starting her swimming lesson this Saturday. So tomorrow she's going to go jump in the pool. and get some guidance on how to do swimming. We want to make sure that if she ever falls in a pool, she can handle herself.
That's exciting.
So yeah,
I've
that's
seen some of those videos of the babies. It's very impressive when they like flip over.
dude. I brought her down at beach house. We have a pool as well as the ocean. I didn't bring her. We only to look at the ocean. We didn't bring her in the ocean. We're not crazy, but I did bring her into the pool, and she's definitely a water baby. So we're gonna do that, and I think we're just gonna catch up on things here in Washington D.C. Check in with the folks in Colorado. You guys know that the main trading trainer company is based in Fort Collins, Colorado. So we're checking in there, kind of just taking inventory as well as, preparing our portfolio, seeing what's available for trading. That's going to be my weekend, low key.
Awesome. Wonderful. So with that, we'll go ahead and close things out and catch everybody next week. Thank you everyone for joining us today.
Take care, everybody.